Hi there, welcome back to my channel Training Express. Today is session number 4 and we will be talking about balance sheet equation. But before we talk about session number 4, let's look at the answer to question in session number 3. Question was, which category of business would restaurants fall under? Service business, merchandising business, manufacturing business, or a combination of 1 and 3? Well, the answer here is a little bit tricky. The reason is that normally restaurants would be considered a service business, which is correct. But somehow try to note that they have certain features which make them a manufacturing business as well. For example, they would start with the raw spices, raw food, and then they would process them and prepare a finished product in the form of a breakfast, lunch, or dinner. So we can safely assume that restaurants would fall under the category of a service business as well as a manufacturing business. Okay, today is session number 4 and today we will be looking at practical application of the balance sheet equation. You will see today we are going to look at how different transactions can affect the balance sheet equation and what can be the effect of those different transactions on the components of balance sheet equation, which are assets, liabilities, and equity. So let's check out session number 4. Today is session number 4 and we are going to look at the application of balance sheet equation. If you remember from previous sessions, balance sheet equation comprises of 3 elements: assets, liabilities, and equity. And in its original form, balance sheet equation comprises of assets equal liabilities plus equity. Today we will be looking at how multiple transactions can affect the balance sheet equation. So we learned that the original balance sheet equation is assets equal liabilities plus equity. But we can easily rearrange these components of the balance sheet equation, and the same equation can be expressed as assets minus liabilities is equal to equity, or assets minus equity is equal to liabilities. Now let's start our practice session. In this practice session, we will look at multiple transactions and we will see how each transaction affects the balance sheet equation. Let's start with transaction number 1. Mr. James started his own business, James Consulting. It's a sole proprietorship business, and invested cash of $10,000 from his personal savings. Commentary: James is starting a business named James Consulting. As James is the owner of the business, so the money invested in the business by James is called capital or James capital. Now let's do the transaction analysis here. Step number 1, we will try to identify which components of the balance sheet equation are affected in this transaction. We can see Mr. James brought cash in the business, and in return business is giving a claim on the business resources to Mr. James in the form of capital. Step number 2, we need to classify each of these components. So we can see that cash will be classified as an asset and capital will be classified as an equity. Step number 3, we have to look at which of the component is increasing and which of the component is decreasing. So in this transaction we can see cash is increasing as well as capital is also increasing. Now let's record this transaction in the balance sheet equation. Cash increased by $10,000 and James' capital increased by $10,000. So our ending balance of cash is $10,000 and ending balance of James' capital is $10,000. Let's look at the summary so far. Total assets are $10,000, total liabilities $0, and total equity of $10,000. Remember, after every transaction, balance sheet equation must always be in balance. Transaction number 2, James Consulting purchased a computer for $2,500 cash. Commentary: the business James Consulting purchases a computer for cash. Let's do the transaction analysis. Step number 1, we need to identify which accounts are affected in this transaction. We can see that James Consulting purchased computer for cash. So the two accounts affected are computer and cash. Step number 2, we need to classify each of these accounts. Computer will be classified as an asset and cash will also be classified as an asset. Step number 3, which account is increasing or decreasing? We can see here that computer asset is increasing and cash asset is decreasing. Let's record this transaction in the balance sheet equation. We will start with the beginning balance, which is actually the ending balance of the previous transaction. If you remember, at the end of the first transaction, we had a balance of cash of $10,000 and capital $10,000. Now let's see how transaction number 2 is affecting the balance sheet equation. We purchased computer for $2,500 cash. So computer asset will increase by $2,500 and cash asset will decrease by $2,500. Now we can calculate the ending balance. Cash will be having an ending balance of $7,500, computer $2,500, and capital as it is $10,000. Now let's look at the summary so far. Our total assets are $10,000, total liabilities $0, and total equity $10,000. Let's look at transaction number 3. James Consulting purchased furniture for office on account, which means on credit, for $1,200. Commentary: the business James Consulting purchases furniture on credit. Let's do the transaction analysis here. Step number 1, we will try to identify the accounts which are affected by this transaction. We can see James Consulting purchased furniture on credit. So the two accounts being affected are furniture and accounts payable. Step number 2, we need to classify each of these accounts. Furniture will be classified as an asset. Accounts payable will be classified as a liability. Step number 3, we need to look at which account is increasing and which account is decreasing. So we can see that furniture is increasing and accounts payable is also increasing. Let's record this transaction in the balance sheet equation. Beginning balance of cash $7,500, computer $2,500, capital $10,000. And now we will be talking about transaction number 3. We purchased furniture on account, which means on credit. So we can see furniture increased by $1,200 and accounts payable also increased by $1,200. So the ending balance here, cash is $7,500, computer $2,500, furniture $1,200, accounts payable $1,200, and capital $10,000. Now let's look at the summary so far. Total assets we have $11,200, total liabilities $1,200, and total equity $10,000. Transaction number 4. Mr. James withdrew $500 cash from the business account for his daughter's birthday. Commentary. Money withdrawn by the owner from business account for personal use is called withdrawals or drawings. It results in decrease of equity. Let's do the transaction analysis here. Step number 1. We need to identify which accounts are affected in this transaction. So we can see that Mr. James withdrew some cash from the business. So the two accounts affected here are withdrawals and cash. Step number 2, we need to classify each of these accounts. Withdrawals will be classified as an equity account and cash will be classified as an asset. Step number 3, we need to see which account is increasing and which account is decreasing. So we can see here that withdrawals are increasing and cash is decreasing. Now let's record this transaction in the balance sheet equation. Mr. James withdrew $500. Although withdrawals are increasing, but this increase in withdrawal will ultimately decrease my equity. So that is the reason I will show withdrawals as a negative amount of $500. On the other side, $500 cash was withdrawn, so you will see a decrease in the balance of cash by $500. Now we can look at the ending balance. Cash right now is $7,000, computer $2,500, furniture $1,200, accounts payable $1,200, capital $10,000, and withdrawals negative $500. Now let's look at the summary so far. Total assets are $10,700, total liabilities $1,200, and total equity $9,500. At the end of this session, let me ask you a question. James Consulting purchased a car for $20,000. It paid $5,000 deposit and signed a note payable for the remaining amount. How this transaction would affect the balance sheet equation? For the answer, please check out my next session, session number 5. Okay guys, this is the end of session number 4. So let's see what we have learned today. Today we have learned how different transactions can affect the components of balance sheet equation, namely assets, liabilities, and owner's equity. I hope you enjoyed today's session. Please stay tuned for more accounting lectures and don't forget to subscribe to my channel. Thanks for watching.